Welcome to Chapter 2, Transactions Affecting the Accounting Equation. The essential outcomes for Chapter 2, you will be able to use the accounting equation to record transactions into their debit and credit parts. A. Identifying accounting practices related to analyzing transactions. B. Utilizing T accounts to analyze transactions. C. Analyzing how transactions affect the accounting equation. D. Connecting your key terms in the chapter with application. In Chapter 1, we learned how to classify accounts according to the accounting equation. We determined whether accounts were assets, liabilities, or owner's equity. After we determined the transaction, we also calculated their new balances for each account. We know that assets must equal liabilities plus owner's equity. In Chapter 2, we are going to learn about how to use T accounts to analyze our transactions. To start, let's look at some accounting terminology. T accounts are accounting tools used to analyze accounts in the accounting equation. T accounts will show a debit side and a credit side. Debit is simply another name for the left side of a T account. It may be abbreviated DR. Credit is simply another name for the right side of a T account. It can be abbreviated CR. The normal balance side of each account will be the increase side. The increase side is determined by where it falls underneath the accounting equation. Chart of accounts are a list of accounts used by a business. Charts of accounts may vary, but generally they are very similar to all businesses. So, to analyze the accounting equation, we will draw a T. On the left side, we'll write the words assets. On the right side, we will write the two words liabilities plus owner's equity. Assets increase on the left side. Liabilities and owner's equity increase on the right side. So, this accounting equation shows you the increased sides for assets, liabilities, and owner's equity. To draw an individual T account, we are going to see that the left side of any T account is called the debit side. The right side of any T account is called the credit side. By comparing the two examples, we should be able to see that the left side simply means debit. Right side, the T account simply means credit. What determines whether an account increases or decreases is the accounting equation. Thus, assets increase on the left side, liabilities and owner's equity increase on the right side. To determine our account balances, again, we need to look at the accounting equation. We know that the increase side for assets is the left side. We know the increase side for liabilities plus owner's equity is the right side. We also know that the increase side is the normal balance side. So, assets will increase on the debit side. They will also have a debit normal balance. Any liability account, since it falls on the right side, will have a credit normal balance because the credit side is the increase side for liabilities. The capital account will have a credit normal balance. Why? Because the effect capital has on owner's equity is to increase the value. So, the capital account will increase on the credit side. How do we deal with decreases in accounts? Looking at assets, we have learned that the increase side for any asset account is the debit side. We also know the normal balance is the debit side. So, to decrease the value of an asset account, we will use the credit side. Looking at our liabilities, we know that liabilities fall on the right side of the accounting equation. The right side determines the increase side. So any liability account will increase on the credit side since it is the right side. It is also the normal balance side for any liability account. So to decrease what we owe in our liabilities, we will have to debit the liability account. Our capital account is classified underneath owner's equity. We know that to increase owner's equity, we need to credit the capital account. The increase side is the credit side. To decrease the capital account, we will have to debit our capital account. However, when you do business transactions, you will never use the debit side of a capital account.
Accounting for Beginners number 1, debits and credits / assets equal liabilities plus equity video. Please stop the video at this point. You're going to go to Google Classroom and access that video. The video will be on ePuzzle or Edpuzzle, so remember to log in. Answer all questions that are given to you on the video and then return to this video. Chapter 2, Part 1, Google Form Quiz. Once you have finished the video, please review the terms and then go to Google Classroom to access the Google Form Quiz link. People sitting on the right or left of you should not be taking the quiz at the same time. Make sure once you start the quiz, you keep your integrity intact and do not use other sources to help you answer the quiz questions. When you finish your quiz, return to this PowerPoint video.
Now it is time to complete our work together for 2-1. Please go to page 31 in your accounting book. You will need working papers page 21. Please complete the assignment. If you need assistance, please ask. Once you have finished this assignment, please return to this PowerPoint.